Stop waiting for Nvidia's China comeback. The truth is, Nvidia has permanently given up on China. Beijing's rejection of H200 shipments means that the $2.5 billion quarterly revenue from these chips is no longer in their outlook. The narrative from the new CEO is shifting away from China and is now focused on the Vera CPU, which represents a $200 billion new market opportunity with a projected $20 billion in revenue this year. However, there's a catch: the company's core growth is decelerating. Current annual growth stands at 70.7%, down from a 3-year average of 121.7%. As they pivot towards the Vera CPU, it must simultaneously create new growth and compensate for the revenue lost from China. Let me break down why Nvidia is moving on from China, and why you should too. Initially, Nvidia's China business was a significant revenue source, driven by modified H20 chips. However, recent updates indicate a definitive exclusion of any revenue expectations from China in the guidance. This isn't a temporary measure, it's a permanent shift. The Chinese market has adapted with their own domestic chips, notably from Huawei, and they no longer rely on Nvidia. This stark reality is crucial for investors to grasp. Now, let's focus on what replaces China, the Vera CPU. This new processing unit is designed for AI data centers and opens up a remarkable $200 billion total addressable market. Nvidia is no longer merely a GPU company. They are evolving into a full-stack compute corporation that includes CPUs, networking, and software solutions. The launch of the Vera CPU is not just a pilot, it's a full-scale entry into a new segment with aggressive revenue expectations. However, growth is now slowing. The gap between current year-over-year growth and the 3-year average is alarming, 51 percentage points. The challenge ahead is clear: the new CPU story now has to fulfill two roles. It must generate its own growth while also replacing the lost revenue from China, estimated at around $10 billion annually. This means the Vera CPU must generate an ambitious $20 billion just to maintain performance levels and signify growth. The pressing question is whether Vera CPU can handle the demands of two businesses at once. Analysts are concerned about this balancing act. If Vera CPU underperforms, Nvidia's growth narrative could falter, but if it excels, it may render the loss from China inconsequential. It's a critical juncture that hinges solely on engineering and execution, not on external trade negotiations or diplomatic efforts. As we examine potential outcomes, several key insights emerge. First, Nvidia's silence on China serves as a strong indicator that they have fully accepted the shift. When a company removes guidance for a significant market, it's prudent to believe them. China is not returning to Nvidia's revenue stream. Secondly, the Vera CPU pivot signifies a strategic move to build a sustainable new business. The real test will be whether they can execute effectively in this new arena. Thirdly, while 70.7% growth is impressive, it's essential for investors to reset their expectations, as this slowdown is typical for a maturing company. Given all this information, what should Nvidia investors do now? The main takeaway is to accept that the Chinese market is no longer viable for Nvidia. Focus should shift toward the Vera CPU and watch for updates on its revenue performance in the next earnings report. If it meets the $20 billion target, the growth story might remain intact. Conversely, if it falls short, re-evaluation of the stock could be in order. For those still holding on to hope for a China revival, it's time to re-evaluate. The focus in China is moving towards domestic solutions, and Nvidia's guidance makes it clear that the door has closed. As we approach the next earnings report, keep an eye on three critical indicators: the performance of Vera CPU, trends in growth stabilization, and gross margins which will indicate profitability. Ultimately, one might argue that the best thing to have happened to Nvidia was the loss of China. Necessity often drives innovation, and Vera CPU may be the embodiment of that principle. Now, I pose a question to you. Do you believe that the Vera CPU can effectively replace the revenue lost from China, or do you think Nvidia's growth trajectory is at a permanent standstill? Share your thoughts in the comments below. If you want more in-depth analysis on Nvidia and its role in the evolving AI landscape, like and subscribe for further updates. Thank you for watching.